Welcome back, everyone. We have started with fiscal policy, the most important, like the very on the top. If any topic comes, then this is the topic which we need to know, because everything, every newspaper article, every economic analysis, policy analysis that you will have to write in the mains, write in your economic essays, write in your prelims MCQs, you have to know about fiscal policy and monetary policy. Obviously, that is the second part of it. But we have started with fiscal policy. Very important. What is fiscal policy? Let us revise a few concepts which we did yesterday. One of the most important concepts which was why are we doing fiscal policy? Why are we following such a kind of fiscal policy? Because we are following a counter-cyclical fiscal policy. We follow a counter-cyclical approach. What does counter-cyclical means? That we go against the cycles. When our economy is going up, when we are growing, excess growth might lead to inflation, because beyond a point of time the manufacturing capacity cannot increase quickly, but the prices will increase because demand is rising and economy is growing up. And what will happen is it will only lead to a surge in prices but no real output, right? So only nominal growth will happen, real growth will not happen, and that will lead to inflation. So in these times, what counter cyclical fiscal policy says, that when your economy is growing beyond what it should or beyond the ideal level, or to avoid further fluctuations, to avoid further peaks and troughs, what you need to do is, when you are in a growth or in an inflationary phase, then you have to do some things which tame the growth, do some things which reduce the growth, do some things which normalize the growth and not excessive, and does not put an excessive burden on the prices, right? So that is when you let's say if you are having one toll of taxes, then you increase the taxes. When you increase the taxes, like I told you, spending is the fuel for the economy. Spending and prices are the fuel for the economy. So when you increase the taxes, what happens is that people get lesser purchasing power with them. People have less purchasing power with them, and then they can purchase lesser goods. When they can purchase lesser goods, demand will automatically reduce, price rise will automatically be slowed down, and then it will eventually come to a peak, or eventually it will take a U-turn from the peak. Right? Then the economy will start to go down, the prices will start to settle down, or it might even go down, and then we enter a phase which is known as the recession phase. Now, in order to prevent recession from becoming depression, what we do is we enhance, we step on the accelerator, which increase our speed. Then it again goes up and it goes down. This is a counter-cyclical fiscal policy. We go counter to the cycle. Okay, if you are very happy, then grounded. If you are very sad, then you uplift. Right? Then we started with fiscal policy. The main objective of fiscal policy is to manage the finances of the government, because you cannot run a country, you cannot run any organization, be it your household, be it your own personal finances, or be it an economic unit like an entire country. You just cannot run without knowing the financial levels, without knowing how much do you have and how much or where do you want to spend, where is your expenditure happening. So we saw a few terms, right? Please help me recreate it. So we wrote something, some kind of transactions. There were two specific kind of transactions. One was capital in nature and one was revenue in nature. Try to recollect, what do we mean by revenue in nature? I'm not talking about income or outflow. I'm not talking about inflow, outflow, or income or outgo. I'm talking about the nature of the transaction. What is revenue in nature and what is capital in nature? So very quickly try to remember what is revenue in nature. Very quickly try to tell me, what do you mean by revenue in nature? Revenue in nature means R for revenue, R for recurring, R for routine, right? R for revenue, R for recurring, R for routine. They are routine nature. They are usually of a higher amount, right or wrong? Wrong. They are of a lower amount, right? Please pay attention. They are of a lower amount. They are of a recurring nature. They are of routine nature. They are of a lower amount, and they do not result in creation of any dash or dash. They do not result in creation of any dash or dash. They do not result in creation of any asset or liability. Yes or no? They do not result in any creation of creation of any asset or liability, because they are revenue in nature. What are the examples from personal life? You can take an example of revenue in nature. Is your salary income is revenue in nature. Then your monthly grocery expenses are revenue in nature. Then internet expenses which you pay monthly are revenue in nature. Small time routine expenses or routine incomes are revenue in nature. Then what is the other type? What is the other side of the coin? They are capital in nature. They are capital in nature, right? So we saw that they are capital in nature. Then what do we mean by capital in nature? What do we mean? We mean that they are of a huge amount. They are usually of a big amount. Yes or no? They are of a big amount, one. And secondly, they do not occur, they occur rarely or occasionally. They do not recur frequently, like with the case of revenue transactions. Like we saw, the red ones were recurring frequently, the yellow ones were special ones. They do not recur frequently, they are usually of a high amount, and very important, they result in creation of dash or dash. They result in creation of any asset or liability that was a capital in nature. Right? Do you remember all these things, revenue and capital? Then we saw that both these are nature, but actually money comes in and money goes out. So when money comes in, we call it as receipt, and when money goes out, we call it as expenditure or expenses. So maybe we can divide revenue and capital into two categories: revenue expenditure, revenue receipts; capital expenditure, capital receipts. Yes or no? Right? We made a chart also, so help me recreate that chart. We wrote revenue here, and we wrote capital here, right? These are recurring in nature. These are small amounts. They do not result in creation of an asset or a liability, and these are capital in nature. Okay? Then you divide these into two parts. One is revenue receipts. Now I'm not writing full forms. I hope you understand this. One is revenue expenditure. Same goes for capital receipts, and you have your capital expenditure. Right? Okay. Then what did we see? We saw a few examples of revenue receipts, revenue expenditure, capital receipts, and capital expenditure. What are the examples of revenue receipts for the government? What are the examples of revenue receipts for the government? One of the examples, one of the very first example which we saw was taxes. Then we also saw some non-tax examples. For example, can you think of any non-tax revenue receipt, any non-tax example? Can you think about it? Penalties, fines, user charges, electricity, utility charges, etc. All of those things come under revenue receipts. See, remember, they are receipt for the government. They are an inflow for the government. They are an income of the government. Okay. Then we saw, then we talk about revenue expenditure. What are the revenue expenditure sources, or what are the means of revenue expenditure for the government? Very simple. Salaries. First of all, it is salary. Second, it is subsidies. Right? Third, it is interest on loan taken, which you pay. Right? So when we say interest on loan taken here, interest on loan given would come here, yes or no? Interest on loan given. Okay, interest on loan taken, interest on loan given. Very important things we are missing out here. I hope you have told. It is defense expenses also, then pension and also all of them come here. Right? One very important aspect which we wrote yesterday, which we know that grants are also of a revenue nature. Grants received by India from outside India, or grants received by state from the union government, or received by third tier of the government from any of the other tiers of government. So I would write grants. I would write grants received here. Okay, because it is my receipt. Grants received here, and grants given, I would write it as here. Right? Grants given and grants received, revenue expenditure, revenue receipt respectively. Then we move on to the other side. We move here. What is capital? What is capital in nature? Capital means it results into creation of some asset or liability. It is of a bigger amount and it is for a long term. Okay? What is asset or liability? Asset is something which you own, which you possess, which gives you benefits for longer periods of time. In accounting terms, that period is usually more than 1 year. If it is giving you a benefit of more than 1 year, then you call it as a capital thing. Right? So we come to capital expenditure. Capital expenditure, where does government spend a lot on in terms of capital expenditure? Where do you think it will spend on? Infrastructure, right? Major expense it will spend on infrastructure also, and money is going out in huge terms. So can I say loan given would also come here? Loan given and grants given. There are two very different things based on the nature. See, in both things, something is going out, but here this is resulting in creation of an asset or a liability. Can anyone tell me loan given is resulting in creation of an asset or a liability? It is resulting in creation of an asset because you have the right of taking interest from that person to whom you have given the loan. it creates an asset for you, right? Similarly, what else can you think? Infrastructure aa gaya, loans given again. Infrastructure, anything and everything comes. Schools, colleges, hospitals, everything, every infrastructure you can think of comes here. Is there anything else which you can think about loan given here? Anything else? So if loan given is here, okay, which means you are giving loan to someone and he will give you interest. Similarly, when you have taken a loan, it was recorded in capital receipt. When you are repaying the loan, it will be recorded in capital expenditure. So repayment of loan taken. Okay, repayment of loan taken, since this is of a capital nature, I would write as it creates asset or a liability. It creates asset or a liability. So obviously, capital expenses result in creation of an assets. In creation of assets, not always, but many times. And we know that capital. Before writing anything about capital receipt, what are capital receipts? They are big amounts. They do not. We do not receive them frequently. We receive them periodically or after some time has passed, not very recurring in nature. But capital receipts we can further divide into two parts, 1 and 2, right? So one are debt creating capital receipts, so you can write as debt creating capital receipts, and second is non debt creating capital receipts, right? Now which of them result in creation of an asset or a liability? First of all, do they result in creation of asset or do they result in creation of liability? Capital receipts result in creation of an asset or liability. What do you think? Capital receipts result in creation of a liability. Why do they result in creation of a liability? Because when you receive money, it has a burden attached to it that you have to repay them back. If it does not have the burden, it becomes a non-debt creating capital receipt. Here it becomes a debt creating capital receipt. Do we know some examples of it? Debt creating capital receipt, loans taken. Here we saw lottery was one of the examples. Very big example which we saw yesterday of non-debt creating capital receipt was disinvestment. Is it clear? Do we remember all of these things? It's very simple. Okay? These are all examples. So tax will have direct tax, indirect tax. Direct tax will have separate collections from different types of taxes. All of that is there, right? Then we saw very important. See, let us visualize this. You take a page and you make two columns. Okay? These are two sides of the same page. Here is your total column. Total. So whatever you will write here, that total will come here. Whatever you will write here, that total will come here, right? So we have two types of money flows. Either money is coming in or money is going out. If money is coming in, let's say if money is coming in, you are writing it as here. What kinds of monies are coming in? We saw two types of inflows. What are they? One is revenue receipts and second is capital receipts. Yes or no? Right? And if you are and here would be the total of your total inflows. So total receipts would come here. And let's say here you are writing your outflows. So what are the outflows? You have your revenue expenditure as your outflow and you have your capital expenditure as your outflow, and total expenditure you will write here. Then you will try to find the difference. So there is a possibility that receipts might be higher. There is a possibility that expenses might be higher. If receipts are higher, then it is known as a surplus. If expenses are higher, then it is known as a deficit, right? It is normal English. If expenses are higher, you will run a deficit, right? You are in deficit. And if receipts are higher, then you are in surplus. So first I told you a very golden rule of financial management is that to use short-term money for short-term expenses only. So you will try to match these, yes or no. And then first of all, you will try to find out whether you are in revenue surplus or revenue deficit, yes or no. What is the formula for revenue deficit? See, you know the logic. I hope you know the logic. What is the formula for revenue deficit? It is revenue expense minus revenue receipts, not revenue receipts minus expense, because this will show you a surplus. Okay? Take care of the signs, minus or plus, whatever you are writing, please take care of it. So if you reduce this from this, and if you get a positive balance, which means expenses are higher than receipts, which means that you are running a revenue deficit. So I can say that revenue expenses minus revenue receipts is my revenue deficit. Yes or no? Simple. We saw yesterday. right? Then you have not borrowed anything yet because you want to know how much surplus you are in, how much deficit you are in. What you do is you total this. You take the total of your expenditure and you take the total of your receipts and you reduce it. So if receipts are more than expenditure, is it a deficit or a surplus? It's a surplus, because receipts are more than expense. Then not to worry anything. See, if you are in surplus, you don't have to worry anything. You can just keep on saving that surplus. All this analysis we are doing because money is limited, because there are a lot of babies to feed and very less sources of income, right? So imagine if you are having 10 children and if you are having only salary which is 20 or 25,000 per month, it is very difficult. And same is the case with our mother India, same is the case with our country and our government, because there are so many people. There are more than 137, 138 billion people here. Sorry, 138 crore people here, that simply the income which we have is not enough for everyone's welfare, because government has to spend on lot of social benefits also. COVID care, COVID vaccines are free. Hospitals government hospitals do not charge anything. There are a lot of subsidies which government provides, defense expenditure. All of these expenses do not earn any revenue. They are just one side expense, because you do kharcha but you will not get any benefit. The only benefit you get is social benefit. You will not get any economic benefit back. But if you construct bridges and all, you will get economic benefit back, right? So governments are always in surplus. Sir, did any government have surplus? Governments are always in deficits. So did any government in the India level, state governments or any world government, did any government have any surplus? There was only one instance of surplus during World War II, and that also was pointed to faulty accounting practices. So nobody really knows whether we had a surplus or not. In some states, we have had surplus budgets. We have had surplus budgets in some states, but that is because of excessive grants received by the central government. So that state had received a lot of grants from the central government. So if you receive grants from the central government, you are a state. Where will you write? If you receive grants from the central government, you will write it as revenue receipts. So this was inflated, which inflated this, and this was the same. So that is why surplus was there. But 99% of the times, all the states in India, all the UTs in India, all the countries in the world, they have deficits. Okay, simple, because the means of raising revenue are not enough to feed the expenditure, right? So now I want you to find out how much is the total deficit, so that you come to know how much to borrow from the banks. So what you will do is you will add this plus this, you will do the total of your expenses. The total I have to spend this much, no matter if it is revenue, no matter if it is capital. I went to expenditure side, right? Then I went to revenue side and I reduced total expenditure minus revenue receipts minus capital receipts. I will get a positive figure which will show my deficit. But here I just make a small correction. I would only reduce non-debt creating capital receipts, because I want to find out how much I want to borrow. So why I do non-debt creating capital receipts? Because I don't have any debt creating capital receipts yet. I want to find out how much should I borrow. And that kind of deficit, what is that kind of deficit called as? That kind of deficit is called as fiscal deficit. Yes or no? We saw all this. So what is the formula which is given? Is total expenditure minus revenue receipts plus non-debt creating capital receipts. These brackets are very important, because then this plus minus becomes minus. Okay? This is the formula given in the textbooks, but the logic is this, that you want to find out fiscal deficit. Okay, very good. So far we know two kinds of deficit, right? Now I gave you an example of a state where state had received a lot of grants from the central government. Yes or no? So now imagine that you are central government and you are giving grants to, let's say, Madhya Pradesh. So suppose you are giving grants to Madhya Pradesh. Where will you record it? You are central government. Where will you write among these? Grant to Madhya Pradesh would be written here, because it is grant given by central government. We are central government. It is our expense and it is of a revenue nature. Right? Now, kahani mein twist. What is the twist? You gave 50,000 crores as grants. That state, Madhya Pradesh, used it for creating a new railway line. For that state, it became a capital expenditure. Yes or no? So that state would have received it here, first of all. Central government said ki my revenue expenditure 50,000 crores, grants to Madhya Pradesh. Come to Madhya Pradesh accounts or Madhya Pradesh finances. 50,000 has come from central government revenue receipt. But that 50,000 is being used here for creation of bridges. Yes or no? And it is central government's money which is being used for creation of railway or bridges. Yes or no? State is just a pass through, because that money is going to state and then again going towards this. So state people say ki sir, this is wrong. We are encouraging using this for this and using this for this, but that Madhya Pradesh state, we have given this to it, and Madhya Pradesh state is using this for capital expenditure. Yes or no? So then we say ki theek hai, if it is using it, it is within its mandate to use. It is not illegal to use. But then some of your juniors or some of them say ki, sir, then we cannot say our revenue deficit is this much. Why? Because the grant which we gave to Madhya Pradesh, which we showed here, okay, the grant which we showed here, 50,000 is my expense. But in short, that is used for capital expenditure. State, it is via state, no doubt. But it is our money which is being used. If they use their own money, let them do whatever they want. Right? But it is our money which we gave to Madhya Pradesh. We are central government, which we gave to Madhya Pradesh, and they are using it for construction of a new railway line. Right? So this figure is flawed, because ultimately I told you it depends on the nature of the transaction. So 50,000 crore which we recorded here, now indirectly what I can say is that it should have been recorded here, because ultimately it is used for construction of bridges. Yes or no? So what do you do here? What do you do here? You remove that 50,000 from revenue expenditure. You write it here. Okay? That is the second arm. Don't bother. But will you reduce your revenue expenditure? Yes or no? Will you reduce for true accounting, for true picture, for clear picture? Will you reduce revenue expenditure by 50,000? Yes or no? So let's say your total revenue expenditure is 1,20,000 crores, and out of that 50,000 crores is revenue grant to Madhya Pradesh. But you came to know that revenue grant is being used for capital purposes. So you say that 50,000 is not it should not come here, but it should come here, because of the nature. My paisa is only being used there, na? Yes or no? Would you do this? You will reduce your revenue expenditure by 50,000 and you will include it in your capital expenditure, because ultimately 50,000 is used for capital purposes. Now it presents a clear picture. So now, in the example I told you, my total revenue expenditure, which I considered initially, I am the central government, was 1,20,000. Now my accounting records, will it show 1,20,000? Will it show 1,70,000? Or will it show 70,000? Confused? What I'm asking is, if I ask you, simple example, if I ask you, give me a list of all your expenses. You say ki I bought books worth rupees 500, I bought chocolates worth rupees 100, I paid for internet, I paid for newspaper, so on and so forth, right? Then you come to know ki one of your expenses, one of your expenses was not your expense at all. You came to know that it is someone else's expense. So you would reduce it from your list of expense, right? That is what we are doing here. So we are talking only about revenue nature expenses here. But that 50,000, though when it was given, it was revenue expenditure, but ultimately it reached in construction of bridge, and it is my money. So when I am sitting here, I cannot say my revenue expenditure is 1,20,000. I will say that my revenue expenditure is only 120 minus 50, 70,000, because that 50,000 is not used for revenue purposes. It will be used for capital purposes. Yes or no? So what will you do? So what will you do if this is reduced? If this is reduced by 50,000 rupees, and you write it here, you increase your capital expenditure because it has gone to MP and MP has constructed a railway line. So we are now counting only revenue deficit. So will your revenue deficit increase or decrease? Tell me. After this adjustment which you do, after this setting which you do, or after coming to know ki this, you had included 120, but ultimately 50 is going for capital purposes. So will your revenue deficit increase or decrease? It will. Your revenue deficit, what will it happen? Just try to imagine. We'll take numerical example. You had initially calculated 1,20,000 as your routine expenses, and let's say your revenue receipt is only 30,000 rupees. So how much is the deficit that we are running? We are running a deficit of 90,000. Yes or no? This is my revenue deficit. Then someone tells you that this 120,000 includes 50,000 rupees as given as grant to Madhya Pradesh, right? And then you come to know that Madhya Pradesh has used it for construction of a railway line and not for revenue purposes. So you say ki my total revenue expenditure is not 120 now. I am central government only. You say ki my total revenue, this write it in capital books. My revenue books, only revenue expenses should happen. So you will write this as 70,000. How 70? 120. Me say you remove this 50,000. 70,000 remains. This 30,000 your receipts is not affected because there is no problem in receipts. 70 minus 30, your revenue deficit becomes 40,000 now. Yes or no? Do you agree with this? Okay, this is your true revenue deficit. Can I say this is my true deficit? Because Madhya Pradesh ne dhoka diya hai. Madhya Pradesh told us that it will use for revenue purposes. We wrote in revenue, we gave it the grant. It also received in revenue, but it is using that for creation of capital assets. So we say it is our money which is being used. We are central government and MP is using our money for construction of railway tracks. So our books or our record should show a clear picture. This is a false picture now. This is a more clear picture because ultimately only 70,000 is being used for revenue expenditure. 50 went in the capital books of our records, right? So my revenue deficit has reduced by the amount which was given as grants. Yes or no? Do you agree? Simple. Can I say this is the true revenue deficit now? Yes. This deficit in economics terms is known as effective revenue deficit, ERD. This true revenue deficit is known as effective revenue deficit, ERD. Effective revenue deficit. This is the true nature of the revenue deficit. True nature, effective revenue deficit. Okay, clear so far? So what is revenue deficit? Revenue deficit is nothing but excess of revenue expenditures over revenue receipts. What is effective revenue deficit now? What did you do to arrive at effective revenue deficit? What did you do? Simple way mein, what did you do? You removed the amount of grants which you had given and which they used for creating capital assets, yes or no? Which they used for creating capital expenditure, yes or no? So the formula in high level terms is, the formula is effective revenue deficit, ERD, equal to, see, don't by heart this, you know the logic behind it, right? ERD is revenue deficit, you took this minus 50,000, yes or no? You arrived at 40,000. 90,000 minus 50 is 40, that is the formula. So revenue deficit minus grants for creating capital assets. Is this formula clear? Is this formula clear? Effective revenue deficit is nothing but revenue deficit minus grants for creating capital assets. Because the grants which we gave to Madhya Pradesh, 50,000 rupees, they were used for creating capital assets. So I would reduce my revenue deficit from 90,000 to 40,000, which means I am not at a loss of 90,000. I am at a loss of only 40,000, which means that my revenue management policies have to focus on filling in the gap of 40,000, not 90, because 90 में से 50 is used for capital purposes. So this is not my revenue gap. My revenue gap is only 40,000. ठीक है? This is known as effective revenue deficit, ERD, effective revenue deficit. Understood? It is very simple. Nothing but revenue deficit में से you reduce the amount of grants or expenses which you have shown under revenue, but now it is being used for capital purposes. So you reduce them and you arrive at effective revenue deficit. Revenue deficit minus grants for creation of capital assets. This is effective revenue deficit. ठीक है? Understood? Very good, very easy, no problem. What is fiscal deficit now? I want everyone who is sitting at home to please try to recollect. What am I asking? What is fiscal deficit? Try to recollect. It is your total expenses, total kharcha, whatever you do, total expenses minus your revenue receipts in bracket plus your non-debt creating capital receipts, right? Total expenses minus revenue receipts plus non-debt creating capital receipts. That shows your fiscal deficit. Yes or no? What is effective revenue deficit now? Effective revenue deficit is nothing but revenue deficit minus your grants for creating capital assets. Grants which you had given for creation of capital assets, grants which were of a revenue nature but they went into capital expenditure and created capital assets, then those are called as effective, then that deficit, resulting deficit would be called as effective revenue deficit. So far very good. What is revenue deficit? revenue deficit is nothing but excess of revenue expenditure over revenue receipts. ठीक है? What is the formula for fiscal, or what do you mean by fiscal deficit? It shows the total deficit of the government, and how to fill that deficit. You can borrow from friends, family, you can ask someone for money. You have to borrow them, because unless you don't borrow, you will not be able to fulfill your expenditure obligations. Yes or no? ठीक है? Agreed? Very good. Now what happened in 2014 was there was a government change, right? In 2014 BJP came to power and Congress lost power. Congress was in power since last many years, and then BJP came to power in 2014. Now imagine you are appointed as the Economic Affairs Secretary and or Finance Secretary, and you are being called by the Finance Minister in his room, and it is 2014, new government has come into picture, and everyone is very happy, but the Finance Minister looks stressed. Why? Because Finance Minister tell you ki why is fiscal deficit very high. Okay, you are IAS. It doesn't matter government changed or not changed. You have been working in finance ministry since 4 years, let's say. So you have worked with Congress for 4 years, and now government changed and new BJP government has come, and he asks you ki why is fiscal deficit so high, which means why are expenditures very high, or why are receipts very low, or why are we borrowing so much, what can we do for it? So you then tell ki sir, I will look into the accounts and I will let you know ki why exactly is fiscal deficit high, which part is affected. Either taxes are very low. See, either this can be very low or this can be very high, which will result in your fiscal deficit being higher, right? Either your kharcha is very high or your expenses are low, which will result in a very big gap. So then you come to you divide, you open your files and you see कि कहाँ problem है, where is the problem? Is salary too high? Are subsidies too high? Are interest on loan taken too high? Defense expenses is too high? Or is tax too low? Non-tax revenue नहीं आ रहा है, it is too low, right? Then you also see कि whether capital expenditure is too high, right? You identified one thing, and you identified these things and you gave to the minister कि sir, these are the figures कि salary इतना बड़ा है, salary is increased so much, expenses are increasing, revenues are not increasing, receipts are not increasing in line with the expenses. So finance minister says and tells you कि I got a call from PM Modi and he was asking me the same thing कि why is our fiscal deficit high? Okay? Because people are blaming us. Economic newspapers are writing that government's fiscal deficit is very high, government wants to borrow and all of these things. So finance minister asks you now what do I tell PM? So you tell ki sir, these are the accounts, you only see ki what is high. Then he starts to see. He says ki we have to work on increasing taxes, we have to work on increasing non-taxes, we have to work on increasing our grants, we have to appeal to World Bank to give us grants. He says that we have to reduce salary expenditure, we have to reduce subsidies, okay, rationalize subsidies and all of those things. Okay? Then he also looks at that, he looks at everything. Then he comes to one particular figure where he says ki why is this figure my problem? He says ki this is not my problem, this is not required. He comes to this figure, right? He tells ki why is this very high, interest on loan taken. What is this interest on loan taken? Can I say it is previous borrowings ka interest? You have borrowed it earlier, you are paying interest na, because you are taking a loan for 10-15 years. Okay, so 2002 में let's say suppose you had taken a loan for 20 years, you would be paying in 2014 also उसका interest, right? So finance minister asks you कि give me details of this, which loan was taken when. Then you find out deeper, you go to the filing room and you find out कि loans were taken right since 80s, 90s, which are still going on. ठीक है, and उस पे interest are increasing. So now tell me, if this is a very high figure, this will be very high. If this will be very high, fiscal deficit would be very high. Yes or no? Because this is your expense, this is your kharcha. If your kharcha is increasing, your fiscal deficit would also increase, right? Finance minister says, this is not my problem. I was not in power. I wouldn't have taken so much of loan. I would have devised good policies. I would have, borrowed lesser amount. Because borrowing 20 years ago is putting a burden here. Yes or no? We saw past question paper analysis. Do you remember the PPP question, public-private partnership question, where the question was in 2014, it was asked, long gestation PPP period results in transfer of unsustainable liabilities to the future generation. It was asked in 2014 mains. Is it not the similar thing which is happening here? Because this was borrowed earlier in 1990s, but uska impact you are seeing today because of interest is very high. So if government wants today to reduce fiscal deficit, government will have to increase tax to match this expense. Yes or no? And today's generation will suffer. Today who are paying tax, they will suffer. But when when this loan was taken on which you are paying this interest, when this loan was taken, तभी तो you would have taken a loan freely and you would have used your money, but उसका interest we are paying now. ठीक है, so this is transfer of unsustainabilities. Finance minister is lecturing you on this. You say कि sir I know all of this, now what to do? So finance minister tells you कि give me a calculation when you remove this, which means I want to know what is the actual fiscal deficit due to government operations. This is the loan taken na. So you say ki sir, but this is also government operation, you have borrowed it. He says I am from BJP, I don't care what Congress did, give me a figure of all of this excluding that part. He says ki Congress took these loans, this is not my fault, Congress took these loans, and Congress would have, so instead of 100 rupees, Congress let's say took 150 loans to hide their inefficiency, to hide their corruption. I'm just giving an example, to hide their inefficiency, to hide their corruption. They could not raise taxes, there were so many issues, tabhi drought hua tha, famines had happened, that is why Congress had to take much loan. I don't care, I am in power today, I want to know ki if I exclude this, then what is my deficit? Then you will come to know the actual fiscal deficit with respect to all other things. This is the legacy of the previous government, I don't care about this, right? Okay? So he tells you calculate by removing this. Just remove this and calculate. Now you only tell me, if you remove this figure from your calculations, what would happen to fiscal deficit? Would it increase or would it reduce? What do you think? If you exclude this figure, what would happen? The fiscal deficit would reduce. Why? Because this is your expense. If your expense is reducing, this RE would reduce, which would resulting of T, total expenditure, and your deficit would also reduce by the same amount. Okay? So you give the calculation. You tell ki sir, earlier fiscal deficit was 2 lakh crores. After removing this, fiscal deficit is 1,65,000 crores. Simple, 35,000 crores you removed from the calculation. Why? Because it was this. This particular deficit, which you can say actual deficit of the new government, hai na? This is the actual deficit which the finance minister asked for. This particular deficit is called as primary deficit. This deficit is called as primary deficit. PD, primary deficit. This is called as primary deficit. Sir, what about formula? You know the concept, then you can devise your own formula. Primary deficit is fiscal deficit minus interest on loans taken. Simple, straightforward. This is primary deficit. So your finance minister, your new boss is saying primarily how much is the deficit? Forget about previous loans, forget about a previous interest. See, we are not stopping payment of interest. We are just calculating कि वो छोड़ के कितना होता है. Like leave that and how much is your deficit. You are just calculating. It is not that you are stopping your interest payment. It is not that minister is saying I don't care what they borrowed, I will not pay interest. He has to pay interest. It is a legal agreement. It is a legal contract. But he says कि for the purpose of calculation, show me the true deficit. कि how much is actually by government operations. So that is known as primary deficit. Primary deficit is nothing but your fiscal deficit minus your interest on loans taken. Okay, that is called as primary deficit. Do you agree with this? Do you understand this? Now tell me the formula for, or now tell me what do you mean exactly, or what do you understand by effective revenue deficit? What is the meaning of effective revenue deficit? What do you think? Just try to recollect what is effective revenue deficit. Try to recollect what is effective revenue deficit. Logically think what was the story behind effective revenue deficit. The story was that revenue deficit also had a component of grants which did not go to revenue expenditure, but it went on a separate track to capital expenditure. So you remove that track altogether from your revenue list or your revenue accounts. And then you say, okay, revenue deficit is not itna because some of it has already been used for capital purposes and hence my revenue deficit is lesser. and then that lesser deficit is known as effective revenue deficit, which is nothing but revenue deficit minus your grants for creating capital asset. Not all grants, grants which have resulted in capital assets, grants for creating capital assets, right? Now what is primary deficit then? Primary deficit, always remember the story of your new finance minister. He said ki interest on loans previously don't include in calculations. I want to know, apart from that, how much is my fiscal deficit. So you cannot name same deficits as fiscal deficit. That is why you told that we call this as primary deficit. So your fiscal deficit is the major figure. Usme se, after that, if you remove interest on loans which are taken, already taken by the previous government or by the same government in earlier years, you remove all of that interest from your calculations, interest expense from your calculations, and then you will get primary deficit. Now some of you might think that so we should also exclude interest on loans which we are receiving due to the previous government. So if Congress government had given a loan to Bangladesh and uska income is coming, so that we should also reduce that. So there are some economists who say that yes, you should reduce that. There are some economists who say that you should not reduce that. But for the purpose of UPSC, that is irrelevant completely. You should only know that primary deficit is fiscal deficit minus interest payments on loans which were taken by earlier regimes or earlier governments or earlier years. Samjha? These are the 4 types of deficits which you need to know by heart. These are the 4 types of deficits which you need to know inside out, conceptually, with full understanding, without making any mistake in the science, without making any mistake in the understanding and conceptual clarity part. Did you understand these 4 deficits? These are the main crux of your fiscal policy. These deficits are calculated every year, every quarter by the government, by all. It is tracked by all economies around the world. It is tracked by major newspapers, major organizations. Everything depends on these deficits. Almost all news articles in business newspapers you will find on deficits only. Why is deficit bad? How much is deficit? How much deficit is bad? How much deficit is good? Is deficit good at all? That we are going to see in a while. So the first question, or the first step we answered yesterday for reducing deficit was to increase your revenue receipt. Yes or no? We saw this. First thing is to increase this or reduce this or both. So we asked ourselves the question ki we have to reduce your revenue expenditure first or capital expenditure first. So I told you have to try to reduce your revenue expenditure first. Why? First reason is because it is related to your day-to-day survival. See, tomorrow even if you reduce capital expenditure, but if you still are running revenue deficit, then it is not useful for it. That is one. Second, you have to reduce revenue expenditure because there are a lot of inefficiencies, lot of rationalization which can be made in these things, and you have to try to this. And capital expenditure, why is it more important to keep capital expenditure going, or keep on incurring capital expenditure? Because this is like an investment which you are making. When this bridge would be completed, let's say it takes 10 years, 10 years that you only have to pour in money, no doubt about it. But after 10 years, this will help this also, this also, this also. It will help everything. This is like an investment which you are making now. But this revenue expenditure is only giving you benefit for one time. You pay one monthly salary, he gives services, finished. This will give you once bridge is constructed. After 10 years it is constructed, but it will last for 100 years. And then that 100 years you will get a benefit of tolls and all of that. Okay? So this is like an investment. We invest in almost all of the things. Suppose you are building your own car. Let's say you are an engineer, you are building your car. So it will not be ready tomorrow. So you will reduce all your expenses. You will try to build your car because after that you will have a benefit for a long time. So this is like that. These are capital expenditures. Okay? Then I told you that revenue receipts have to be used for revenue expenditure and capital receipts have to be used for capital expenditure. Now imagine what happens when you use revenue receipts for your capital expenditure. When you use revenue receipts from your capital expenditure, the problem is that you are using your daily money for long term this thing. So you will keep on pouring money, but you are not getting anything in return. Okay? Similarly, if you borrow debt creating capital receipt, if you took a loan of let's say 1 crore rupees from a bank, okay, and you are using that money for eating food, and if you are using that money for buying fuel, what will happen? It is a wasteful expenditure because you have to if you are taking such a big loan, you have to construct an asset out of it. You have to get something which gives you benefit, buy a car, buy a house, or something which will give you a long term benefit, right? People take lakhs and lakhs of rupees of loans for weddings, only for weddings. That is a complete wasteful expenditure. Why? Because, and big amount I'm talking about, because you are using long-term funds for short-term uses. You are using capital expenditure for capital receipt for revenue expenditure. Just imagine taking 1 crore loan from bank and ordering from Zomato and Swiggy every day for 5 years for the rest of your life. It is wasteful. Uska benefit is over. Instead, you can buy a house and that house will give you benefit for a very long time. Yes, always this has to match with this has to match with this. Cross matching is very bad for your financial health. Samjha? What is primary deficit? What is primary deficit now? Try to recollect what is primary deficit. Primary deficit is nothing but fiscal deficit minus interest on loans previously taken or interest on loans taken. Okay, that is primary deficit. What is effective revenue deficit? Effective revenue deficit is nothing but your revenue deficit minus grants which went for creation of capital assets. What is fiscal deficit? Fiscal deficit is nothing but your total expenditure, which is revenue plus capital, minus your revenue receipts plus non-debt creating capital receipts. That always keep in mind that plus sign is very important in bracket. If it is outside of bracket, then it is minus only, because you collect your revenue receipts, ki I earn this much salary, you collect your non-debt creating capital receipts, I have earned lottery this much, and then you compare with your total kharcha and then you calculate fiscal deficit or fiscal surplus. If you have more receipts, then it is a fiscal surplus. Yes or no? Is it true? Is it agreed? Can we move ahead? Okay. Now we come to a very interesting part of our lecture, and I love this part especially, and this is done nowhere as far as I know, that I will give you small sums where you have to calculate revenue deficit, fiscal deficit, effective revenue deficit and primary deficit. 4 things you have to calculate, and you know the formulas. I will give you the figures, you just have to substitute them and you just have to calculate. This will cement the understanding of deficits in your brain. And why am I forcing you to do this is because when you give your prelims exam and when you see the options and when you get confused whether it was plus or minus, then it will be a very sorry state, because that is one easy MCQ which you are not able to solve. Okay, so you should have absolute conceptual clarity. You should have a precision like focus while understanding these concepts, because in newspaper every day I will show you your fiscal deficit ke upar news comes, and if you don't understand the gravity of it, then economics will become very tough for you. But so far, whatever concepts we have studied, let's say we have studied 8 to 10 concepts till date, counter cyclical policy, GDP and all of that, everything is clear so far. Yes or no? So far, is it crystal clear? Is everything understood by you? Yes. So we will see some. I will give you a sheet, and please open your calculators on your mobile and or on your laptop or anything, or if you have a calculator, then please do. And I will give you some figures. I will give you a set of figures. You don't have to do anything except from you only have to calculate effective revenue deficit, fiscal deficit, primary deficit. Once you do that, once you get it, then we can move ahead. Right? Now I told you that all these deficits are in figures, right? Because your total expenses are 150, your total income is 120, 30 rupees is your deficit. So we in India or in economics, we don't mention the absolute figure because that keeps on changing. We mention it as a percentage of GDP to gauge whether our fiscal deficit is high or low. We don't see the absolute figure. See, I'll tell you why. You might have 1,50,000 as your monthly income and 1,20,000 as your monthly expenses. So you are in a surplus of 30,000, right? Similarly, you might have zero expenses, you have 30,000 income. You are still in a surplus of 30,000 only. It is the same thing. So to gauge the scale, out of my total value of all goods and services produced in the economy, out of my GDP, how much is my fiscal deficit? How much do I have to borrow to fulfill my GDP or to continue with my GDP? Okay? So if I say you that fiscal deficit is 3%, which means fiscal deficit upon GDP into 100 is your 3% this thing. So let's say next year the absolute figure might be very high, but uske samne GDP has also increased. Na? See, I'll show you. This is all maths. Huh? I hope you are able to relate to this. See this, it's very simple. Fiscal deficit is 40 rupees. Okay? Fiscal deficit, which means your expenses minus income is 40 rupees. Uske samne. Achha, why are we doing all these expenses? Why are we doing these revenue expense and capital expense? Why are we doing this? so that people are happy, so that goods are produced, so that economy is running, so that GDP increases, right? And we have established that GDP increases, everyone gets the share of their money. Okay? So let's say today I have a fiscal deficit of 40 rupees. Uske samne I have a GDP of 100 rupees. How much is my fiscal deficit? My fiscal deficit is 40%. Yes or no? Why? Because I did 40 upon 100 into 100, 40%. Let's say tomorrow my fiscal deficit increases to 80 rupees. Tomorrow my fiscal deficit increases to 80 rupees. My GDP increases to 1000 rupees. Now what happens? Now what happens? Is it 8% now? Of 1000? So if I did not tell you this, you would have said your fiscal deficit has doubled, but your GDP is also increased 10 times. Na? So this is a better situation or this is a better situation? This is a better situation because 1000 GDP, to finance 1000 GDP, you only have to borrow 8% of it. So which means I can say that if the total value of all goods and services produced in the economy during a particular period, which is GDP, is 1000, 8% of it has come out of borrowed money. Yes or no? I have borrowed 80 rupees. I had a lot of money with me, but I borrowed 80 rupees and then I am pushing all my money in the economy and I am getting a GDP of 1000 rupees. Out of 100 rupees GDP, I had to borrow 40 rupees. 40% I had to borrow. So which is good, which is bad? This is very good, this is very bad. Yes or no? Similarly, all deficits, this was an example of fiscal deficit. You can call it revenue deficit, you can call it effective revenue deficit, you can call it primary deficit. All deficits are expressed as a percentage of GDP. All deficits are expressed as a percentage of GDP because it gives a common denominator. It gives a common benchmark to analyze your performance, right? Your test scores, prelims or mains, so your test scores also have a common denominator, that is 250 marks, 200 marks. Unless they have a common denominator, just simply saying my score increased from 80 to 95, but out of how much? That is very important. If it is out of 1000, then it makes no sense. If it is out of 100, then you become the topper of the class. Okay? So GDP is your common base. Now, what we are going to do is we are going to do live calculations. Ekdam live we are going to do. What do I mean by live calculation is and this data we are going to take, you know how much I love government documents. We are going to take this data directly from the budget document. All the figures we are going to take from the budget documents. If you are able to arrive at GDP, revenue, deficit, all of these deficits, then I consider myself to be fairly good at explaining the concepts and I consider you to be excellent in understanding the concepts. Okay? So let us see those figures. What I have done is I have bag 1, bag 2, copy में होगा. Wait, see this. We'll try to read this. First of all, we'll try to understand whether we know this or not. Then we'll move on to the calculations. Okay? Budget at a glance presents broad aggregates for the budget. See, this is by government. This is a budget document. This is not by any random newspaper or something. This document shows receipts and expenditure as well as the fiscal deficit, revenue deficit, effective revenue deficit and primary deficit. Do we know all these deficits? Yes or no? We know all these deficits. Fiscal deficit, revenue deficit, effective revenue deficit and primary deficit of the government of India. It gives an illustrative account of sources of receipts and their expenditure through graphs and infographics. So we know all these 4 deficits. Yes or no? See, government is telling this, we are reading that only. In addition, this document contains resources transferred to states and UTs with legislature. This document also contains extracts of allocations for programs and schemes and giving insights, which is fine. Fiscal deficit. Now comes the real juice. Fiscal deficit is the difference between revenue receipts plus non-debt creating capital receipts and total expenditure. Is it not the same that we studied? Yes or no? Fiscal deficit is reflective of the total borrowing requirement of the government. Is it true or false? How much is your deficit? You came to know that I am running a deficit of 100 rupees. Now that 100 rupees you have to borrow from someone. Yes or no? So that is why fiscal deficit is reflective of the total borrowing requirement of the government. Revenue deficit refers to excess of revenue expenditure over revenue receipts. Yes, we know that. Effective revenue deficit is the difference between revenue deficit and grants for creation of capital assets. Exactly, we know that. Primary deficit is measured as fiscal deficit less interest payments. Do you agree? Government also agrees with us. See this. Budget reflects firm commitment of the government to boost economic growth by investing in infrastructure development, which means capital expenditure they are talking about. This is substantiated by increase in capital expenditure by 34.5% compared to the last budget. So when government says that capital expenditure has increased by 35% compared to last budget, which means they are pushing in for growth, infra growth. Yes or no? That is what they are saying here. I always told you capital expenditure is the best kind of expenditure you can have. That is what they are doing. ये तो ठीक है. This is also fine. ठीक है? I'll explain what this is. So I'll explain these things. So and we do this in our budget session. So it's okay if you keep it light here. So what happens is budget is for the next year. So we are currently in which financial year? We are in the financial year 2021-22. Our financial year started from 1st April 2021 and will end on 31st March 2022, right? So the budget which was made this year on Feb, before the end of last year, budget is being made. That budget was made for the coming year. So when you will read your budget, which will come next year, which will come on 1st Feb 2022, that budget would be for the coming year. 22-23 का budget होगा वो. It will be from 1st April 2022 to 31st March 2023. You always budget for the future. You account for the past, but you budget for the future, right? So this is a coming year का budget. But at the same time, any budget involves some estimations. Estimately we'll spend this much. Estimately we'll spend this much. As the year passes, actually you know that this expenditure requirement is very high. Okay, you expect 2 liters of water will suffice, but when you actually go running, you will come to know that 2 liters is not enough. Similarly, you realize that we expected that taxes would fetch us 100 rupees, but it actually brought us 150 rupees. Okay, changes keep on happening, and then you change your estimates. You change your figures. So that is what government also does. So when government will present next year's budget, last year ka figures it will change based on actual experience. Okay, so see this. Budget was given on 1st Feb 2021 for the year 2021-22, the coming year. We are in that year now, but this was presented in Feb 21. So for April 21 to March 22, these are called as budget estimates. Okay, budget estimates. Last year, before this year, 2020-21, they have given revised estimates. So these budget estimates, when you read your budget, these budget estimates would be revised estimates, because currently second wave, third wave, will get a lot of data from actual data from it, right? So they have compared 2021 last to last year what budget we had made, what is the revised estimate, and then uske pehle wale year ka in 1920 they have given the actual expenses, because accounting takes a lot of time. Okay, so that budget estimates also get revised into revised estimates, and then after 1 year you come to know actual. So this budget estimate ka actual will come to know after 2 years. Okay, so just see this. Do we know what is revenue receipts? Yes. I'll just give you an example. See, all rupees are in crores of rupees. So this is kitna hai? 16,84,059 crores. So this was actual of 2019-20. Then last year we estimated ki 20,20,926 we'll get. Okay? Crores we'll get. But it was revised to only 15,55,000. Why? Because in budget 2021 we did not know about pandemic. Pandemic happened, we revised it. Okay? Similarly, for everything we have. So do we know what is tax revenue? In revenue receipts there are tax and non-tax. Yes or no? Tax, non-tax. Barabar hai? Do we know what is capital receipts? Remember, capital receipts, either they are debt creating or they are non-debt creating. Recovery of loans. We have given a loan which we are recovering, so that repayment of loan given, that will come under capital receipts. Yes, we have given Bangladesh loan, now it is paying us back. Other receipts, forget other receipts. Okay, see, they are always round figures if you notice, other receipts. Okay? Borrowings and other liabilities. Borrowings, the word borrowing suggests that it is a debt creating capital receipt. If debt creating capital receipt is this, which means these are non-debt creating capital receipts, right? And what do you think is the biggest example we saw of non-debt creating capital receipt? I had always tell you, one is the biggest example of non-debt creating capital receipt is disinvestment. Proceeds from disinvestment. Remember, disinvestment, non-debt creating. We spoke yesterday a lot about disinvestment, strategic disinvestment, all of those things. This is nothing but disinvestment. Other receipts and other receipts. It is nothing but disinvestment. So we are expecting, when we are releasing the budget, we are expecting that we will raise 1,75,000 crores by selling off government shares to other entities. Do you realize or do you agree or do you understand what I'm saying? This is the disinvestment target. Ki 1,75,000 crore worth of shares in so many PSUs would be sold by the government to other parties and we'll recover this money. This is a source of non-debt creating capital receipt. Okay, we know total receipts. Do we know what is revenue expenditure? So this is total expenditure. Uska breakup is given. Revenue expenditure on revenue account. Uska breakup is also given. Revenue expenditure ka breakup is given. Interest payments, are they revenue expenditure? Yes. Interest on loans taken. Remember, this is what we reduce while calculating primary deficit. Grants in aid for creation of capital assets. Do we know this? When we calculate effective revenue deficit. And expenditure on capital account, which means capital expenditure for bridges and all of that. Right? So they have calculated these deficits for these years, 19, 20, 21. I want you to calculate these figures for the last year, for the latest figures. So what I have done is I have, masked these figures. So just forget column this, just forget these columns. Just ignore these columns. This column you have to ignore, this column you have to ignore, this column you have to ignore. Just focus on this column. And you have to calculate revenue deficit, you have to calculate effective revenue deficit, you have to calculate fiscal deficit, you have to calculate primary deficit. Now, if you notice, absolute figures are also given and percentages are given in brackets. So, sir, what do we take as GDP? Because you want to remove it as or you want to calculate it as a percentage of GDP only, right? So, here they have given that also. They have helped us with that. What they are saying here is GDP has been projected at 222,87,379 crores. Okay? So just take this figure, you can write it down separately, 222,87,379. This is your denominator. This is your base. Okay? Assuming how much growth they have assumed? 14% growth over the estimated GDP of last year. Okay, so this is your denominator, this is your total GDP which you have to use for all calculations because आपको percentage निकालना है, you have to remove percentage. So 3,21,000 you will get as a deficit, but out of what? Out of this, and then you have to tell me the percentage of it. Okay, so I'll just show you the data. I will not help you anymore now. You have to apply your logic. You have to apply your, see, this you don't need now because you have to calculate all four of them. This you don't need, RD, ERD, FD. I'll just show you these figures. Just focus on this last column. Do not focus anywhere else. Now it is better, no? Big. Just focus on the last column. Only the last column. Nothing else. You have to calculate the four kinds of deficit: revenue deficit, effective revenue deficit, fiscal deficit, and primary deficit. And you have to tell me, or you have to calculate the percentage terms. I am not interested in the absolute figures. I am interested in what is there, what was there in the brackets, which is percentage of GDP. GDP, if you want to see, I will show you once more. Please write this GDP down. It is 222,87,379. It looks like a phone number, na? 222,87,379. Okay? So please write this down aside, 222,87,379, and then I want you to calculate RD, ERD, FD, PD. Use these figures. You know the formulas. Use your logic. Don't even use the formulas, but only for this last year. Okay? If you are able to do this, then we will consider ourselves experts to be calculating deficits. This is not done anywhere. This is not CSAT paper, I know, but you will not be able to understand these unless you use it practically. Okay? I can teach you to ride a car, but unless you sit and you shift the gears, you will not realize what I'm talking about. Blue is the total, and black is the subcomponents or the subcomponents of it. Just focus on these last figures. You don't have to look at any of the other figures. Last column, and you have to calculate all the 4 deficits. That is when you have understood the deficits. Is it done? Let us calculate together and we'll see whether we have arrived at the right answer or not. चलो, let us check. Let us check. We'll keep it here. So first of all, revenue deficit, which is fairly simple, I feel. ठीक है? What is the formula for revenue deficit, which is excess of revenue expenses over revenue receipts, right? So we have, where is revenue expenditure here? This is 10 is the revenue expenditure, right? Because total expenditure is 10 plus 3, which is 10 plus 13. So this is revenue and this is capital, and this is revenue ka breakup. Okay? So revenue account or revenue expenditure is 2929,000. वही है ना? 2929,000. 2929,000 minus your revenue receipts. How much is revenue receipts? How much is your revenue receipt? Revenue receipt is 1788424. 1788424. It doesn't matter, huh? Tax, non-tax. 1788424. So minus 1788424. This is your absolute figure of your revenue deficit. You divide it by that figure, which is 222,87379. ठीक है? Into 100. 5.1. ठीक है? So we'll write it down as 5.1. Somewhere we'll write it. We'll check later on. So revenue deficit we have arrived at is 5.1%. Yes or no? Did you get it? 5.1%. Okay. Then we move on to effective revenue deficit, because it is just a derivation of this. क्या था? We'll have to do it again, because 2929,000 minus 1788424, that will give you your revenue deficit, minus what do we reduce to find out effective revenue deficit from revenue deficit? Grants for creation of capital assets. Yes, so we'll have to reduce this grants in aid for creation of capital assets, 219,112. So 2929,000 minus your minus 1788424 and minus grants in aid for creating capital assets, 219,112. ठीक है? Divided by same figure, 222,87379. Okay, you get 4.1%. So into 100 would be 4.1%, right? So I would write this as effective revenue deficit at 4.1%. Next you have fiscal deficit, which is the most important part of it. Fiscal deficit. What is fiscal deficit? What is the formula? Total expenditure minus revenue receipts plus non-debt creating capital receipts. Total expenditure, what is total expenditure? 3483236. So we'll enter total expenditure 3483236. I am going slow deliberately. 3483236. Don't tell me, sir, you are a C. How can you calculate so slow? 3483236. Okay? Total expenditure minus, you have minus bracket में you have to plus, so we'll plus those two things first. क्या था? Minus revenue receipts plus non-debt creating capital receipts. So 1788424 plus What is non-debt creating capital receipt? These two. Do you agree with me? These two are non-debt creating capital because this is debt creating capital receipt. Okay? So these two. So how much is this? 1,75,000 plus 13,000. 88. 188 है ना ये, बराबर ना? So 1,88,000. So 3,483,236 minus revenue receipts 1,788,424. I'm not putting a bracket, so I'll directly reduce it. Minus कितना था? 1,88,000. बराबर ना? ठीक है? This is the figure, resulting figure which we get. And of course, what is the next step? Divide by how much is this into 100? If you do 2 decimals will go, it's 6.76. We'll round it off to 6.8. We'll round it off to 6.8. Okay? If you झूठ लग रहा है तो I'll do this and show 6.8. ठीक है? We have a fiscal deficit of 6.8 here. And then final, what was the final one? Which is primary deficit, which is fiscal deficit minus what? Minus interest on loans which were previously taken. ठीक है? So what are the interest on loans which are previously taken? इसको क्या हो? What are the interest on loans which are previously taken? Interest on loans previously taken, where it is? This? Is this it? Interest, revenue expenditure में से interest on loan previously taken you have to remove, which is 809,701. Okay? So you remove 809,701 from your fiscal deficit. So again we'll have to do the calculation for fiscal deficit. So for those who did not follow, you can follow once more, because we have to reach fiscal deficit and then we can reach primary deficit, right? So fiscal deficit ka formula was total expenditure. How much is total expenditure? 3,483,236. 3,483,236 minus revenue receipts 1,788,424 minus 1,88,000 non-debt creating minus interest payments 809,701. Right? Now this divide by 222,873,79. And then you multiply it by 100 because you don't believe me, and we have 3.12, right? 3.12. Let us check if we made any mistake or not. ठीक है, ये कैलकुलेशन है. We'll close this file. Five 4.1, 6.8, 3.1. 5.1, 4.1, 6.8, 3.1. Sir, don't tell 3.13 here. They have given for only one decimal. ठीक है, this is our answer. We have arrived at the right answer. Fairly simple. Did you understand the formula? Do you realize that what we are reading, that is exactly what is budget? That is exactly what is being used by the government. There is nothing beyond this. Okay, please keep this in mind. In this topic, in these deficits and all, there is nothing beyond this. See, this is the same copy or the same file, but with no this thing, hiding of these figures. So RD is 5.1, effective is 4.1, fiscal deficit 6.8, primary deficit 3.1. So I want you to remember the targets. I want you to remember, not now, when you will read the next year's budget, I want you to remember the targets. Only two targets you have to remember, RD and FD. See, formulas you have to remember, or the concept you have to remember for everyone. In fact, UPSC will never ask RD and FD, UPSC will ask these only. But for answer writing, in mains I am telling you, for answer writing, you have to remember RD and FD. You don't have to remember the percentage. So this year, so you don't have to remember. Next year, you will have to remember these percentages. Do you agree? Maza aaya? Okay? We'll quickly go on to here. Now we came to know, so we saw that fiscal deficit in our calculation is how much? 6.8%. Yes or no? 6.8%. What does this 6.8% indicate? Can anyone tell me? What does this 6.8% indicate? 6.8% of GDP is fiscal deficit. But what does it indicate? Kya hai ye? What is it? What does this indicate? This indicates that 6.8% of GDP government has to borrow now, because it has calculated total expenses minus so and so, and it has a deficit now, and it has to borrow now 6.8%. Yes or no? Now where it can finance this deficit, like how to get money? Just imagine you are in need of, let's say, 1,000 rupees. Where can you go? So now government is sitting here and government is thinking, first, very important, first is I can borrow. Yes or no? I can borrow. Chalo, very good. You can borrow. Second, can I ask RBI to just print and give me money? Okay? You can ask RBI to just print and give you money. You are the government, RBI works under you. You can ask RBI just print and give me money. See, because you need this money for spending. You need, let's say, to give salaries and all of that. RBI will print and give you money. You can give them salary. You can ask RBI to print money for you also. Very good. Okay? Now borrowing when you do, see, printing money is done by RBI only. Printing money is not done by anyone. RBI is the sole authority to issue banknotes in India. We'll do that in RBI chapter. You will come to know in detail. Borrowing, where you can borrow now? From where you can borrow? You can borrow within India, you can borrow outside India. You can ask Bank of England to give you money. You can ask USA Federal Reserve to give you money. You are government. You can ask Indian banks to give you money. Yes or no? So you can borrow externally. External means from outside India, or internally. Yes or no? Do you agree? Okay? Externally you can ask anyone. Internally, whom will you ask to? From where would you borrow? Internally, whom would you ask? Kisse loge money? You are the government. Where will you go and beg for money? Internally. See, here you went to RBI. Here you can go to banks, normal banks. You can go to SBI and you can take a loan. Yes, government can do that. Government can also go to individuals like you and me and ask for money, and government does that. We just don't know. Banks and individuals. Just remember this, that government asks money from us also, and I'll tell you how in a while. In 10 minutes I will show you how and when government asks. But these are the avenues of filling in fiscal deficit. Yes or no? Do you agree with this? That these are the avenues of filling in fiscal deficit. Why do we need to fill fiscal deficit? Because we need money to spend. Now I will tell you, how did we do the exercise? Ki, itna is my expense, this is my expense, minus this is my total revenue, and this is my deficit. Yes or no? This is how normally it is done. How actually, or the calculations which happen actually when formulating the budget or when budget is formed is, they target borrowing level first. Ulta they do. Actually what happens is, they say ki let us keep 7% as our fiscal deficit. Let us keep 7% as our fiscal deficit. Remember, this is a budget, which means that you are targeting for the future. You don't know what will happen in the future. You might achieve, you might not achieve. You keep a target of achieving 110 marks in your next test. If next test is very tough, you might not achieve it. If it is very easy, you might achieve more also. So actually what happens is, reverse happens. Government first decides ki how much to borrow. When I say how much to borrow, what is the technical term for it? Fiscal deficit. Yes. And then as per fiscal deficit, government says ki, as per fiscal deficit, how much government says ki, itna hone ke liye, for 7% borrowing, how much do I need my total expenditure and how much do I need my total revenue, so that the balance is 7%. Government does reverse calculation. We have done TE minus TR in broad terms and we came to 7%. They do ulta. They target 7%, that I will borrow 700 rupees. Now, if I have to borrow 700 rupees, that means the gap between my receipts and expenses have to be 700 rupees, which means that today how much is my revenue? Let's say 400. Then and today how much is my expenses? Let's say 500. Which means I can increase my expenses, increase my revenue, keep the gap as 700 and borrow 700. Now you are saying, sir, why this is happening? Because if you don't target this, your this can go to 70% also tomorrow. If you just keep on spending, and your revenue is not increasing, this will tomorrow go to 70%. This will go to 80% also. So that is why India is one of the few countries which follow a targeting regime of fiscal deficit. You target this. So they set targets. We won't go beyond 6%. We won't go beyond 7%. We won't go beyond 8%. Do you agree? Whenever you are taking a loan also, you have to keep a particular level in mind. I won't borrow beyond 50 lakh rupees because it is just not possible to repay it. See, loan taking is very easy, but repaying is very difficult. Okay? In fact, there is a joke which says that in order to take a loan, you have to give your salary documents and you have to give your income tax returns and all of that, right? Then only they will give you loan. So you have to convince the bank that you don't need the money when you want to take money. You have to first show the bank, I am very sound, see my salary, I am very high. And you have to convince them you don't need the money, but you are going there for taking the money. Okay? That is a very, very apt joke. So here always keep in mind the calculation is done in a reverse manner. Government says I will target 7% as my fiscal deficit. Then government decides how much should be total revenue, how much should be total receipts. Let's say government has targeted 7%. Let's say GDP is 1000 rupees. Okay? Suppose GDP is 1000 rupees. 7% of 1000 rupees is how much? 70 rupees. Okay? So now government wants a fiscal deficit of 70 rupees, which means that the gap can be 70 rupees. Government sees that uska total revenue from everything has come to 50 rupees. Government says that total revenue from tax and from disinvestment I can earn is 50 rupees. Now when I can earn 50 rupees, but I want to borrow 70 rupees, which means I have to spend 120 rupees. Yes or no? Because this 120 minus 50 will result in 70, which means government cannot go beyond 120. Otherwise it will breach this target. Do you agree? This is all maths, plain maths. Okay? Now how does government determine this as the second step? First step to determine, done. Second step, government determines how much revenue do I have. So in this also there are two parts. We know that there are two parts. One is revenue receipts and one is capital receipts. Right? Okay? In revenue receipts, government will check how much taxes can I increase. Should I increase taxes? See, if taxes are increased, it might have a negative impact on the economy, because we know if economy is growing, then you increase taxes. But already economy is reducing, you cannot increase taxes because your revenue might increase. But if people will not spend, economy will again go down. Yes or no? Okay? So then bacha kya? What is remaining in your hands? This. In this also, what is remaining? This. In this also, what is the biggest example? This. Do you agree? I am telling about practicality. This is what practically happens. This you will never find in any written literature. This is what practically happens. So then government targets this investment. So any year, if you see that government target, if you see that this investment target has increased compared to last year, which means government is not able to increase this, which means government is not able to increase this, which means government is not able to increase this. Hence they are resorting to this. So if they increase this all is feasible, and then they can spend more. So ultimately everything is happening because they want to able to be spend more. Why they want to able to be spend more? Because our government is a mixed economy. Government provides social justice. Government needs to take care of poor people. Government needs to take care of vulnerable sections of the society, right? So this has to be done. But at the same time, this cannot be unlimited. Yes or no? Tomorrow you say you will spend 1200 rupees. Okay, and then borrow 700 rupees for that, right? But when you borrow, always keep in mind, why are you not able to spend 1200 today on good things? Because you already have past obligations to spend. For example, interest on loans already taken. See, today if you borrow a lot, tomorrow you will not be able to borrow a lot. Today if you have taken a loan from friend for 5 lakh rupees, tomorrow I will not give you loan for 5 lakh rupees. Why? Because you have to pay interest also to that person. Okay? So when I tell you deficit is, when I tell you if government wants to increase expenditure, Government wants to increase expenditure, government wants to increase the fiscal deficit, government wants to increase the borrowing. It will go to the bank. Bank will say, sir, first give your interest already which you have taken loan. Okay? So if today if borrowing is very high, tomorrow's borrowing is compromised. That is why it has to keep a balance between today's borrowing and tomorrow's borrowing. That is why it has to maintain the welfare of today's tax-paying citizens and tomorrow's tax-paying citizens. Because if tomorrow repayment, government cannot do repayment, what it will do? It will raise taxes and then it will use that money here. Okay? But who is suffering ultimately? People. So when government borrowed, yesterday when government borrowed a lot of amount and it spent on a lot of amount, people were very happy. Or subsidies are coming in, loan is high, subsidies are coming in, bridges are being constructed. But when the repayment time came, then government increased taxes from the future generations, and then their welfare, their ability to grow, their ability to be free is constrained or is affected. Did you understand? These are the considerations which the government has to follow, or government has to think about, and then some targets are set. Okay, so we saw that borrowing can be done by internally or externally, or it can ask RBI to print. Okay, it can ask RBI to print money, and then internally, externally, so it can ask from anyone. Internally, either it can ask from citizens or it can ask from banks, normal banks, SBI, HDFC, private, public, etc. ठीक है, इतना समझा? चलो, now I'll ask you a question. Last year's fiscal deficit was 5%. This year, current year fiscal deficit is 7%. Last year fiscal deficit was 5%. Current year fiscal deficit is 7%. Is the government borrowing more or government borrowing less? The government is borrowing more because 5 से 7 हो गया. ठीक है? Now my question is the government following an expansionary policy or a contractionary policy? Is the government following an expansionary policy, or is the government, not RBI, is the government following an expansionary policy or a contractionary policy? What do you think? Take a minute and try to take a guess. What do you think? Is the government following an expansionary policy or a contractionary policy? The government is following an expansionary policy. Sir, how expansionary? Because if your deficit is high, which means you are spending more. You are spending more, which means you are expanding your economy. You are just borrowing and spending, right? Unless you are spending on revenue expenditure. But it is assumed that you are spending on capital expenditure, because we know that loans are taken for capital purposes only, majority. So if I say that fiscal deficit is increasing, which means I am following an expansionary policy, which means government wants to expand the economy, which means government is spending more. If the government spends more, government will have to borrow more, right? Because revenue cannot be increased beyond a particular level immediately. It will take a lot of time to increase revenue. Okay? So I can say that following an expansionary policy will result in fiscal deficit increasing. Yes or no? Yes or no? And what is the opposite? Contractionary policy, which means that government is trying to reduce the expenditure, trying to reduce the fiscal deficit, trying to increase the receipts. Yes or no? That is a contractionary policy. So these two words are very important, but please keep in mind that this is a fiscal policy. There is expansionary monetary policy also and contractionary contracting monetary policy also. So do not confuse between fiscal and monetary. When we'll do monetary policy chapter, I'll tell you. So this is known as expansionary fiscal policy. Expansionary and contractionary. Okay? Expansionary results in fiscal deficit increasing, which is nothing but your borrowings increasing. Contractionary results in your fiscal deficit reducing, which is nothing but your borrowings reducing. Yes or no? Do you agree with this, or you say, sir, you are saying something very wrong, we don't agree with you? Aisa nahi hai. I am saying whatever I am saying is absolutely right. So, okay? Now, very important words I am going to tell you. I am going to tell you some words which you have to use in every answer. You have to find an excuse to use in your answers. You have to just try to use in your answers. Before that, before knowing these terms, you only tell me कि This is fairly simple. You only tell me. I gave you only one weapon, which was tax. You can either, you are government, you can either increase tax, you can either reduce tax. Now tell me, to follow a contractionary fiscal policy, I have to reduce tax or I have to increase tax? The question is, to follow a contractionary fiscal policy, I have to reduce tax or I have to increase tax? Think and tell me, to follow a contractionary fiscal policy, I as a government should increase tax or should reduce tax? See, the answer lies here. Huh? If I follow a contractionary policy, I have to reduce my fiscal deficit, which means somehow I have to increase my receipts, which means somehow I have to increase my tax revenue, which means what will I do? I will increase taxes. So whenever I follow a contractionary fiscal policy, I am increasing my taxes. Taxes are one of the ways. Which tax to increase, direct or indirect? We will come to that. Okay, that is also a matter of question. Which tax to increase, direct or indirect? Okay. Now, if I want to expand means what? I have to spend in the economy. Okay. So what I will do? I will expand, which means I have to reduce my revenues, increase my expenses. I have to expand. Okay. And for that, I will tell citizens ki don't pay me tax. You also spend, I will also spend. So what will I do? I will reduce taxes. Yes or no? Expansionary policy, which means reduce taxes. See, always remember, I told you one important thing, that spending money is fuel for the economy. Okay? So if you want to expand your economy, you have to spend money. If you want to spend money, you have to reduce taxes, because people will have more money to spend and they will spend. Now I'll tell you something very important, the analysis. If you increase tax, government gets more money, yes or no? And then government can spend that money also, no? If you increase tax, here we have written in contractionary, but if you increase tax, government will get that money and then government will spend that money, yes or no? Then why are we writing increased tax in contractionary? This is a very high level we are talking about. Mazak mein, jokes, we have reached a very high level of discussion now. I just wanted you guys to be here, everyone to be here, so that we would have had a lively discussion. But anyways, this is fine on paper. You want to reduce your gap of fiscal deficit, so you increase your revenue sources as a government, and you also tell people not to spend more because you want to reduce the gap, reduce the borrowing. So you tell them, give me more tax, you don't spend, I will augment my revenue resources. I am following a contractionary policy. But is it not true that if I increase taxes, I get more money and I can spend however I want? It is absolutely true. The only difference is me as a government, I don't have the liberty to spend all my money on constructive purposes. I don't have the liberty to spend all my money on remunerative expenditure. I have to give subsidies, I have to give salaries also, which are not remunerative for the economy. Always remember these things, that subsidies are very burdensome on the economy. Subsidies give a lot of pressure on the economy. Okay? So instead of government taking tax of 100 rupees and spending it on some subsidy, let us keep that 100 rupees with the person and he will spend on something. Now where he will spend, he will buy something, he will invest something. C plus I hoga, okay? And C plus I does not have a social purpose always, and hence more benefit to the economy comes from taxes being with the person compared to with the government. I am talking about economic angle. Social angle, absolutely government has to raise money and spend. Okay? So whenever we say expansionary, whenever we say we want to expand the economy, government will reduce the burden on the people. Government will say, enjoy. You enjoy, we want to expand the economy. We are growing. Whenever government wants to bring everyone in line, whenever government wants to contract the economy, or rather contract the fiscal deficit, contract the borrowing requirements, then government will tell the people, please pay us more taxes because we want to raise our receipts, because we want to borrow less. Okay? Increase in taxes will result in increase in revenue receipts. Yes or no? Increase in revenue receipts will result in what? Decrease in fiscal deficit. Yes or no? Okay? And similarly, reduction in taxes will result in reduction in revenue receipts, which will indirectly reduce your total receipts, which will result in higher fiscal deficit. Yes or no? This is expansionary, this is contractionary. And I told you spending is the fuel. So the more you expand, if you want to expand more, the more you have to spend. Be it citizens, be it government, you have to spend more. ठीक है, these are called expansionary and contractionary. Now the two important terms which I was talking about, they come here. Very, very, very important terms I am talking about. Fiscal deficit is 8%. Fiscal deficit is at 6%. ठीक है, I am reducing my fiscal deficit from 8% to 6%. Indirectly, what am I doing? Indirectly, so how does fiscal deficit is calculated? If this is my revenue and this is my expenditure, ठीक है, this is my expenditure. What does this show? That my fiscal deficit is increasing. Yes or no? The difference between expenditure and revenue is my fiscal deficit. ठीक है, second chart if I draw, this is my revenue and this is my expenditure. Can I say my fiscal deficit is reducing? Yes, I can say my fiscal deficit is reducing. ठीक है, now why will this happen? Why will the first scenario happen? When the government wants to spend more. See, I always tell you, increasing revenue is very difficult after a point of time, because you cannot demand more taxes, you cannot demand more fees, you cannot demand more interest, right? So increasing revenue is a very slow process. Increasing revenue is a very comprehensive process. But expenditure, to we know in personal finance also, increasing earning more is difficult. Kharcha, to there are so many things you can increase your kharcha. Today, if I tell you ki spend 1 lakh rupees in a day, you will be able to spend it if you have the money. Yes or no? You will buy some things you want. You will. But if I tell you increase your salary by 1 lakh rupees today, you will not be able to do it. Similarly with the government. So can I say here, this is an expansionary policy and this is a contractionary policy? Yes or no? Okay, this is scenario 1, this is scenario 2. Okay, right? Do you know the English word called stimulus? Do you know the English word called stimulation? To stimulate something. To stimulate means to push. To stimulate means to activate. Okay? So stimulation is an English word. If you don't know the meaning, then please you can Google it. You can Google to understand. Stimulate something, which means किसी को जगाना, or to key some person or to key something. Stimulating. For example, we say that drinking coffee in the morning stimulates our mind, which means it activates our mind, freshens our mind. Okay? Or doing exercise stimulates our body, or drinking water stimulates our body. That is stimulation, to give a push. Okay? So when here in the first scenario, when we are talking about, we are giving a push to the economy. Yes or no? We are spending more. Always remember that Indian Express article, when C plus I fails, G has to take care. So this is G taking care. This is government expenditure skyrocketing. Yes or no? So this scenario. So now tell me, in this thing, fiscal deficit will reduce or increase? In this scenario, it will increase. Fiscal deficit will increase. So this scenario is called as fiscal stimulus. Fiscal stimulus. You are activating, you are pushing, you are refreshing your economy. Why? Because C plus I have failed, G has to take the responsibility now. This is called as fiscal stimulus. Are you understanding? Fiscal stimulus. These words are in newspaper day in, day out. Trust me. I will completely change the way you read newspapers and you understand newspapers. Economy page will be the page which you will be looking forward to. It is a good thing that in Indian Express and Hindu, more of Bollywood news doesn't come. Otherwise, we always try to read that, na? So I always used to look forward to two pages in the Hindu. I read the Hindu in my preparation. I rarely read Express. I only read Indian Express explained page because that is very important. But the Hindu, I always used to look forward to only 2 pages. One, economy. When I started understanding economy, one, economy, and second, world page, international relations. Those 2 pages I used to love, and editorial page was the most dreadful because it has so many words and so much to read. And so in your initial phase of preparation, you are just started preparing. Just imagine yourself that this is a mountain. Okay, always remember that this is a mountain, right? So when you are starting your preparation, you are here somewhere. It will always seem uphill. And when you read things, so let's say today's newspaper you read, you found out 10 new things, be it internal security, politics, international relations. You go here. Then day after tomorrow's newspaper, you find 10 more new things. You go here and you keep on building your knowledge repository. You keep on building your issues ka knowledge. You keep on reading about things. You keep on analyzing things, and you keep on moving here. There will be a day. There will be a day where you will find nothing useful in the newspaper which is new. There will be a day where entire newspaper will you will be like just skim through the newspaper because nothing, I know everything from that, and there is nothing new. There will be a newspaper. So slowly the number of new things which you know about, or you come to know from the newspaper, they will keep on reducing, and this is over a period of 6 to 8 months minimum 6 to 8 to 10 months, and that too only if you read newspaper every day, right? So there will be a day where, suppose today you are spending 2 hours for newspaper, there will be a day where you will spend 30 minutes on the newspaper. Definitely there will be a day, because you have your notes of all the other issues ready. You will, when you reach here, you will notice that almost all the issues are covered here. Okay? So you have just begun your journey here. You have a big mountain to go. You have to know, you have to read a lot, you have to know about a lot of issues. So now when I read fiscal stimulus, fiscal policy ke articles, I just skim through them. What is new? Nothing is new, because I have read all of them. Okay? So this is your journey. So always believe that you will reach here someday, but the only reason wherein you might not reach is lack of consistency. So consistency is something which is of paramount importance in this preparation. This is not a race, this is a marathon. Okay, you have to be consistent, you have to be full of perseverance. Then only you can reach that mountain. And at a time, a point will come where current affairs would be a cakewalk for you. Okay? But you have to be very consistent. Coming back to fiscal stimulus, do you understand what is fiscal stimulus? So if you read in the newspaper, government is going to provide a fiscal stimulus of 2 lakh crores, which means nothing but government is going to increase its expenditure by 2 lakh crores. Fiscal stimulus. Okay? Can I call it as widening the gap? It is widening the gap, yes or no? It is widening the gap between revenue and expenses. It is increasing your fiscal deficit, yes or no? Come to the opposite side now. Okay? Come to the opposite side. What is happening? We are reducing our expenses. See, I have kept revenue similar because it increases a little bit every year, but not by much. Unless you take some drastic steps, revenue will not increase. So, is this reducing fiscal deficit or increasing fiscal deficit? It is reducing fiscal deficit. So this term where you just reduce everything, where you bring it together, where you bring in line, where you want to be a balanced, where you don't want deficit or you want less deficit, that condition is known as fiscal consolidation. This is very important, fiscal consolidation. So fiscal stimulus and fiscal consolidation go opposite to each other, and the meaning is this: fiscal consolidation. You consolidate your position, you consolidate your deficit, you consolidate your expense and revenue mismatches, and you bring them to the level which you desire. It is never zero. Please bear in mind, this will never become zero. But from 10%, you might reach 3%. This is also fiscal stimulus, fiscal consolidation. Okay? Here you are going from 3% to 10%. Do you get it? Yes or no? Right? Now you only tell me, use your imagination and tell me, when will you do this? You are a government, when will you do this? So you are tasked with choosing between fiscal stimulus and fiscal consolidation. When will you go for fiscal stimulus? What should be the economic condition prevailing outside that you would like to go for fiscal stimulus? What would happen ki you have to go for fiscal stimulus? So first of all, what does it entail? It entails increasing expenses. So why do you want to spend so much in the economy when people are not spending? Remember, C plus I plus D plus X minus M. If C and I are not spending, you have to spend. Why are people not spending? There might be unemployment, there might be job losses, they might be scared, they might not have sufficient trust in the economy, right? That is why you spend here. So fiscal stimulus is often given when there is a social need when there is an economic need. For example, there is a recession. Remember this diagram, we have done this. So whenever we are going down, we want to go up. Why? How would we go up? By providing fiscal stimulus. Now is it coming together? Now everything is coming together like a jigsaw puzzle. Okay, and these are just 2-3 parts. When we do tax, when we do banking, when we do monetary policy, we'll come back to all of these things and we'll join and we'll prepare a whole big picture of the economy. Okay, so when will you go for consolidation? When we are already growing high, and then you will try to consolidate, because you will cut down your spending, because economy is now growing. Spending is fuel. I always tell you, spending is the fuel for the economy. Fuel, when it becomes more, it starts heating. So that is when you consolidate your position. Yes or no? Do you agree? Now, very important, very important. Yesterday we read an article in Indian Express, 23.9% wala. Do you remember some years it was high and low and very high? I told you, remember this, and it was somewhere around 2008, 2009. Do you remember this? 2008-9 to 2010-11. These were the 3 years. Okay, I told you, remember this. We'll come back to this. What happened in 2008? Do you know something happened in 2008 in the economic sphere? Global recession happened in 2008. If you don't know, see the movie. Which movie? That movie, Desi Boys. Desi Boys movie mein he loses his job in the movie. Akshay Kumar and John Abraham are there in the movie, right? They lose their jobs. They are in US because recession happens here. In 2008, 2009, recession happened. Okay? Recession happened in 2008-9. People were unemployed. People lost their jobs. And why recession happened and what happened, we'll speak about it in a separate lecture where we talk about the economic events which happened in history. Economic depression, recession, then taper tantrums of 2013. We'll speak about that for approximately 30 minutes to 40 minutes. Okay, but recession happened. Now India was luckily not that affected. It was affected, but not that affected because, see, my personal view is RBI is one of the best performing central banks in the world. The challenges it has in managing the finances or the economics of the country, it is huge. And the way RBI works and the way RBI functions, the professionalism is seen. There might be political interference. There is political interference everywhere. There are political considerations also. Nobody is to be blamed. But RBI is one of the most well operated central banks. So we were not affected much because RBI was prepared for an event like this. And what happened exactly, we'll speak later. But anyways, now tell me, when recession happened, before recession happened, we were doing very good. Okay, because I told you software exports and all, since 2000 we had started, and UPA 1 government was doing very well. In 2004 we received record foreign inflows, everything going very good. But in recession we will have a tough time, yes or no? So if our economy is going like this, in recession will come this, yes or no? So now tell me, before recession, what would be the aim? Fiscal consolidation or fiscal stimulus? Before recession, what would be the aim? Fiscal consolidation or fiscal stimulus? Fiscal consolidation, because we are already doing good. Government doesn't have to intervene much, which means our fiscal deficit would. So if last year it was this much, our fiscal deficit should go down because we are consolidating. Always bear in mind, we are consolidating. Now recession hits. What happens? People lose their jobs, people lose their incomes, economy suddenly goes down. It is not like this, it goes like this. Okay? What you do? You give sudden push, yes or no? Do you suddenly push it? Yes, you suddenly push it. What did you do? You change your policy from fiscal consolidation to fiscal stimulus, yes or no? What happened? Your fiscal deficit again went up. Did your fiscal deficit go up? Yes. After that, when you see that your economy is recovering and all, what did you do? You cut back on your fiscal expansion. This is your fiscal stimulus, na? So you cut back on your fiscal stimulus and you again aim for fiscal consolidation. Yes or no? This was the graph which we saw in that article, Indian Express. This was the reason. So I'll tell you, we were aiming for a fiscal deficit target of 4%. When recession happened, we went to a fiscal deficit target of 6%, 7%. And then again we brought it down in a grade-wise manner. Year on year, we brought some of it down. Do you understand the importance of fiscal deficit? Do you understand why fiscal stimulus and why the debate between fiscal stimulus and fiscal consolidation is important? So recently you might have read that USA President Biden, he introduced or he announced 1.2 trillion dollars infrastructure package he announced in America. If you don't know, then please read newspapers. It was in the Hindu. I'm not quoting some other newspaper. It was in the Hindu. It will be definitely in Indian Express also. So if you know about this, which means he's doing nothing but he's providing a fiscal stimulus. It is also referred to as stimulus package. Okay, these are the words which are used. Stimulus package provided, new package. Now come to COVID times. COVID times, have you heard about Atmanirbhar Bharat package or COVID relief packages and so many things for poor people, for street vendors, for daily workers, for migrant workers, for rural laborers? Yes, this is all a part of fiscal stimulus. Why? Because they do not have their own money to spend, so government has to give money to spend, and that is why fiscal deficit increases drastically, and we go back to our budgetary estimates. Now just see this. This is for 2021-22, which is the current year which is going on. This is for 2021. The first wave hit in 2021. Yes or no? The first wave hit in 2021. Just forget budget estimates for a while. Wait. There is no way of... Wait, I'll do this. This is what? Budget estimates, which year? 2021, revised estimates 2021, budget estimates 21-22, and actuals 19-20. Yes or no? Do you agree with this? So just I have written the heading here because वो चला जाएगा. हाँ. Now focus on this. 1920, no pandemic, things going pretty well. Fiscal deficit 4.6. ठीक है? 2021 budget estimate which we made in 1920. We did not know pandemic is going to happen. Pandemic happened in March, and in 1st Feb we presented the budget. So might be few cases, some 20-30 cases beginning of the wave, but we didn't know that. When we budgeted, we went for a consolidation. Do you see consolidation here? 4.6 to 3.5. Do you see a consolidation here? 4.6 to 3.5. Because we knew the economy is doing good, government doesn't have to borrow, government doesn't have to incur extra interest expense. We will stop. What happened in first wave? Government had to stimulate the economy. See the effect? Do you see the effect? From 3.5 we jumped to 9.5. Never in our senses we would have imagined that we will go to 9.5. Why did we go to 9.5? Because we had to spend a lot. Because we had to stimulate the economy. Because factories were shutting down, people were losing their jobs. Government had to borrow and give money. Now this 9.5, where it will come from? It will come from borrowing only. This is borrowing. This is fiscal deficit. Yes or no? ठीक है? थोड़ा settling down after first wave, after the very dreadful year 21-22, budget estimate 21-22, we are settling for lesser amount. Now when next year's budget will come, when you will get budget figures for 22-23, then this might be somewhere around 5%, if all goes according to the plan. Again, it is terms and conditions apply. You never know when COVID might wreak havoc again. Okay? Do you appreciate this? So if I draw a graph, it is 4.6, 3.5, 9.5, 6.8. Okay? It's the similar graph to what happened in 2008, 9, 10. Same story is repeated. Okay? This is the impact of COVID. So if you name this, what would you name? Is this year consolidation year or stimulus year? You don't know. This is the base year. So let's start with this. This is a consolidation year. Yes or no? Because this is a super stimulus year. This is a stimulus year. This is again a consolidation year. Fiscal stimulus versus fiscal consolidation. Economists always say that you should focus on fiscal consolidation. Why? Because lot of debt is bad for the economy. See, lot of debt has a lot of negative effects on the economy, right? So I hope you understood this. all about revenue deficits, all about, see practically I'm teaching you how it is happening. We are not restricting ourselves to academic discussions only. If you remember this, you will be able to write very good answers. So first point of the syllabus, which says Indian economy and issues relating to planning, mobilization of resources, growth, development, employment. It's a very all over encompassing situation key, whether to go for fiscal stimulus or whether to go for fiscal consolidation, right? So we will stop here and we will continue our discussion, our interesting journey with fiscal policy in the next lecture. Okay, thank you so much for watching. If you have any doubts, you can ask me anytime. Thank you. Take care.